And howdy ho, everyone. It looks like we are underway, and it is indeed 5 to the top of the hour. And that, of course, means it's 5 minutes before we have a London session open, which, of course, is why we're here at this time of day. And each and every day at this time of day, we attempt to sneak some pips out of the market with a pound US dollar breakout trade. And that is, of course, exactly what we're going to attempt today. And let's get into that, shall we? Before we go too much further. Alrighty-o, where do I want to be? Which screen? Just give me 2 secs, guys, and I'll sort that out. Doesn't want me to do that. That's a bit weird. Okay, I'll start there. And we'll work our way to it. All right, I'm on pound US. No, I'm not, CAD Swiss. Right, I seem to have lost my other chart. Here it is. Right, let's go there now. So we'll go to screen number XYZ, number 2, I think it is, and we will set up that pound US dollar breakout. All right, now what we're attempting to achieve, and here are the parameters, guys. I've already got them preset. Unless this changes, this candle, then that's exactly how we'll go in. The high of this one is, actually it's changed. Let's go on to 131.527. Let's make that 131.53 as our entry. That's for the long, of course, 131.53. Which means we've got a risk factor of 25 pips, which means we'll take profit at 12. So that will be at 131.65, not 131.64 as I've got it. And TP2 will be the same as it currently is. Righto. So we can put that in the market, 32.50. No, that's not what we want to do. Selling at 131.25. Stop loss for that is at 131.40 as I've got there. That's good to go. So there's the short in the market. So we're trading this bar here because it's the low of the 3 candles prior to London Open on the hourly chart. And we will trade long above the high of the 3 candle range prior to the open of London. So those will be that will be those parameters, and we'll put that in the market now as well. We have a buy stop at 131.53. And the stop loss will be at 131. No, that's not right. 131.28. There we go. And TP1 on that will be at 131.65, as I said. TP2 131.85. I may change TP2. We'll have a look at that. In general terms, TP2 will be 2 to 1 risk factor. Righto, I can't see the entry there, but that's not unusual. But I can see the stop loss. I can see the stop loss on the other one as well. So we're looking for that to break out of there. And if it so does, there are your TP1s. Now, at TP1 on this particular version of the strategy, we will look to close 50% or a little better if you want, 55%, and move your stop loss, whatever you've taken at TP1. In the buy case, you would move your stop below entry by, what have we got, 25 pips? We're going to take 12. So we would move our stop loss 12 pips below our entry level as soon as we take TP1. So if we take TP1 at 131.65, again, that's a 12 pip TP1. We would then move our stop loss 12 pips below our entry, which would be 131.41, and we would take half of the position off at that time. Conversely, if we get triggered short, we've got a risk factor here of only 15 pips, so we'll be taking profit at 7 pips, which would be 131.18. We would then move our stop loss 7 pips above our entry level, which would be 131.32, and once again remove 50% of that position. Okay, the green light's through to the control tower. The bunny's on its way, and we are racing in the breakout trade. Right, let's hope we get a good result today. Got a reasonable one yesterday, I think, from memory. And we look forward to that ongoing as we try and mind you, those of you who are in the show for the first time, this is a beta test. This is not a proven system or strategy. So please act accordingly. If you are following these particular trades or orders, then you need to be very much aware that this is in beta test mode. So do not put meaningful money in the market on these trades. That is not what it's all about. It's all about discovering the best way to actually trade this. And we've got about 4 or 5 systems now that have, no, 3, this is the 4th one, I think, that we've been trying to perfect it on. And as soon as we do, we will release it as a strategy. But until that time, NO, it is beta test, right? But we just want to trade it live in front of you so you can see exactly what we're doing and how we're going to mix it up and see what's about in terms of profits ongoing. Rightio. Now, should I go around? I don't trade the first 30-minute bar of UK session ever, so there's not much point when we've got somebody else in the room who probably does. And I'm going to say hello to that person right now. Hi, Chloe.
Hi, Jeff. How's it going?
Look, top of the world. Although I'm on the bottom of the world, I'm on top of the world.
Well, it depends which way you're
standing, yeah.
Yeah.
If you're on the North Pole, I'm on the top. If you're on the South Pole, I'm pretty close to the South Pole. But I must say, the weather's starting to warm up. Is it starting to chill off over there?
It is actually, yes. We had an extremely unpleasant heat wave, or for me, it was extremely unpleasant. But now we're back to kind of regular end of August British summer temperatures. Bit rainy, bit stormy, bit windy, bit sunny sometimes, you know, back to normal.
Cool. Well, there's nothing wrong with normal. As long as you're in the place where you're used to it, then that's all good. I don't have a problem.
Prefer it for me. Much prefer it.
Yeah, look, there'll be Twix seasons are the best, aren't they? Autumn and spring.
Exactly. Yeah.
They're the ones that we all love. What's going on? I noticed that a few of the things that I've been trading are now going into pretty strong ranges, but I suspect there's still some trends going on.
There are. They're getting fewer and further between, if we're being honest. So let me just grab the screen.
Sure. Give us a look.
Let's have a look. So there are a couple of things that I am still looking at. I tend to start with the daily time frame and look at the trends there. I do trade intraday timeframes, but I much prefer to pick up something that really goes in the direction of the daily trend, or at least takes direction from the daily.
Is that as far as you go out, Chloe? Do you look at the monthly and weekly?
I do look at the monthly and weekly, and I was just about to do that, Jeff.
There you go. Mind reading me.
I generally start with the daily just out of habit, just because that's where I tend to, I don't know, I think it's just a habit. I can look at the daily and see things pretty quickly, and then I go up to the monthly or weekly just to check that I've got things.
Because it's now the 26th of the month, right? You've forgotten what the month is.
Just to check where I am. So as you said, Jeff, there are a lot of currency pairs that had been trending and are now ranging. Or are now potentially starting to range or pull back, something like that. So for example, I had been looking at quite a few of the yen pairs. We could take Swiss yen as an example. Beautiful uptrend there, but potential resistance. We've had quite a pullback off this level, and it looks to me like that could potentially form a lower high. So that's where I start being a little bit cautious about taking my long trades here. So I am just going to be a little bit cautious about that. But there are a couple of things. Singapore dollar is one of them, where we are actually still in a downtrend. And the reason that I'm looking at Singapore dollar is simply because price is currently sitting at the weekly pivot. So this is where I go down to the lower time frames. But first of all, as you suggested, Jeff, let's have a look at the weekly, and we can see the weekly. So I've got my roadmap here. I've got my areas that I want to trade between. So I've got this horizontal level here where we've had support, we've had resistance, we've had a bunch of resistance over here. We've broken through that area. So my next major area is this one down at the bottom here, all of this support. So my intention has actually been to trade potentially down to that area. Obviously not guaranteeing that price will get down to there, but those are the two areas that I'm trading between. However, what has happened is actually we've had a pretty strong low test bar last week. And not only that, but a couple of weeks previously, we also had what wasn't such a strong low test bar, but it certainly had a long tail. It certainly was a rejection of this area around here. So while that isn't, in my mind, a particularly strong horizontal level, it is something that I'm not going to ignore because of the reaction that I have noted around that point. So with that said, I am just acting with a little bit more caution than I otherwise would. A strong low test bar on a weekly from last week is, in my mind, reason to be cautious. So it's not going to stop me from trading short because I do still have a downtrend, but I am probably going to reduce risk if I do find any trading opportunities. So with all of that said, I then go down the time frames to find an entry that I like the look of, and I like the fact that price is currently at the weekly pivot here. And so all I'm going to do is wait for an entry according to my strategy to the downside on Singapore dollar. It's not happening just yet. It may or may not happen given what I've discussed about that low test bar on the weekly, but if it does happen, then I'm going to be ready to potentially take that short. So that's one of the currency pairs that I am still looking at in terms of trend. Another one is dollar CAD.
Oh, just before you go on,
yeah.
I noticed you're trading the dollars against and with the US dollar. What do you think of it at the moment, the US dollar? It's had a really rough trot.
It has had a really rough trot, hasn't it?
Yeah. Are we in a position to say it can retrace, or is it just hopeless, like a lot of us do think?
Well, I think anything can retrace at any time, Jeff. What I'm not in a position to say is it is going to turn around and change trend. So I can't say it's going to turn around and change trend and suddenly become strong again. But a retracement, a retracement could simply be profit taking. And that can happen at any time. It certainly will happen at significant levels and sensible places for profit taking. That can happen. That can result in a retracement. And all that does in a trend is give us new opportunity to trade in the direction of the trend once that retracement has finished. So really that's what I'm mainly looking out for at the moment.
Yeah, I'm going to say you'd like to see that at the moment, wouldn't you?
Absolutely, yeah, absolutely. But I am also just wary, as I said, with this weekly time frame, things like a strong low test bar on a weekly time frame. Now that doesn't mean that price is going to turn around, the US dollar is suddenly going to get strong and an uptrend is going to start. That's not what that means at all. But what it does mean is price is struggling to push down here. So there are some buyers coming into the market at this point, and therefore as a trend trader, I just need to be aware of what that means, and I just need to manage my risk accordingly.
Happy days. Now, I'll probably butt in every now and then, as I do in the show, because otherwise, if I don't, the questions are like humongous on the list. So I'll just say right now, g'day, Shukri. How you doing, buddy? My goodness, you're a handsome Brit, Shukri. I was watching that that tape, or tape. How old am I? That replay of your show. My goodness, bit of a looker, mate. Bit of a stunner. G'day, SF. Hi, Sino. Sino, your question. Answer, yes. I do think there is a long to be had, but too early for me, not yet. And hi, Swee. Hi, Alan. And don't laugh so hard, Shukri. All right, Chloe, I'll continue to do that as we go through.
No worries. Always good to know who's listening in. Okay, so the other one that I suppose one could say is in a similar kind of position as dollar CAD. The reason I want to mention this is just as a word of caution that this one I really think has potentially run out of steam down here. So my preference is to look out for trades on Singapore dollar rather than Canadian dollar. I just see more of a range developing on these lower time frames, and I just have to be a little bit cautious about a level of support just kind of cropping up here. And my preference would be to see that level broken and then look out for a short trade. So if that trend is to continue, then that level will break, and then potentially I'm going to get an opportunity from there. So apart from that, Jeff, those really are the only currency pairs that I'm specifically looking out for long opportunities at the moment. There will be other
it doesn't
things
surprise me.
Yeah, there will be other things that happen. And of course, I will always be looking to react to the markets rather than try and predict or tell myself that the markets are doing one thing or another. But for me, on the currencies, those are most of these trends look a little bit tired to me. And there's one trade that I've been in for absolutely ages, which is on Aussie dollar. I'm still holding that to the upside because there is still a trend there.
That's interesting. I'm in one to the downside, and I've been in it for a week nearly now too.
Excellent. Well, this is the thing, Jeff. We can make money going both ways.
We can indeed. Just depends on how you
Especially in
approach
markets like this, where I mean that does look pretty sideways, doesn't it? It does look pretty rangy.
Into my strategy, yes.
Yeah. Absolutely possible to make money both ways. And in fact, Jeff, sometimes I think to myself, I wish I could trade like Jeff because then I would be able to make money both ways.
Well, when the trends are going like gold, Chloe, I'm in the opposite position, of course. Maybe we should send each other notes. I don't know.
Maybe we should. So I am still in this to the upside, but I am definitely cooling off my entries. I'm not entering with as big positions as I was all the way down here. The other thing I wanted to touch on, Jeff, and it's something that actually took me a little while in my trading journey. I started off trading Forex. I did dabble in stocks, and I found it a little bit too sleepy. I was a bit too impatient to trade stocks, I think, in the early days.
Just technically, Chloe, or did you actually dig into the values of the companies and the intrinsic value?
Technically, Jeff. Yeah, just technically. And so I kind of got stuck in a rut of only looking at currencies in my trading. And that was, I think, one of my biggest mistakes early on, because you can find a lot of times where currencies are choppy or rangy or consolidating, the trends just aren't there. And in those times, if you forget about the other things, the commodities, the indices, those kinds of things, then you miss out on huge opportunity. And so I just want to point out that while I'm kind of cooling off at the moment on currencies, just until I see more decisive trends either continue or develop, let's take a look at these indices, because this is just spectacular. And I know that Ash spends a lot of time trading the FTSE, and I wish I could read the FTSE like he does. But the US indices, ever since the start or near the start of the coronavirus crisis, they have just been unstoppable. And I was looking
It was a flash
in.
crash when it first hit, and then from then on, man, what a trend!
It's just unbelievable. I can't believe my eyes with what's happening here,
Nor me.
because we we had the Nasdaq, which let me find it. We had the Nasdaq, which took out those. I mean, that is just unbelievable what's happening here. That was the all-time high from back towards the end of February. That was the all-time high. Let's look at the monthly. I mean, price has never ever been that high before. That was the all-time high. We had a crash. Everyone thought it was doom and gloom. It recovered within 2 months, pretty much. And then it took out that all-time high, and it has just kept on going. It just hasn't looked back. Trend after trend after trend, higher highs, higher lows. I mean, that has just been the gift.
Wow, very faithful. Is that the 20 EMA, the blue line?
It is, yes.
Wow, look at that.
I mean, you could literally just press buy on that, couldn't you? Every time it hits. Not suggesting that anyone does that, but so that is something that, even though I'm not trading so much on the currencies this week, and haven't actually been trading so much on the currencies for the last couple of weeks, this is something that I am just going to continue to trade with my strategy, with whatever time frame that fits my strategy, until something tells me otherwise. And nothing is telling me otherwise right now. We don't even have any resistance, because price has never been this high
Never
before.
been there.
There's nothing there. So I thought that was spectacular. But now we're seeing the same thing on the S&P as well. It's just taken out those all-time highs, and there is no sign that is turning around. We don't have a high test bar like on that Singapore dollar I was showing you. We've got a low test bar from last week, suggesting, hang on a minute, there are some buyers coming into the market here. There just don't seem to be any sellers at the moment in this market, hardly at all. So those are two. The Dow as well is looking pretty good, but I'd say the Nasdaq and the S&P are the two that I'm focusing on. And if you are sad and feeling sorry for yourself that you're a trend trader and the trends just aren't there, don't forget to look at other things. Don't forget to look at the commodities, especially gold. I mean, we've seen an amazing run on gold. That is, for me, not so easily tradable right now. But these
it makes far more sense than the indices, though, to me. That
gold does. Oh, absolutely. Yeah, absolutely. It does definitely. I mean, I can't explain what's happening here on these indices.
I think the only thing that I've convinced myself is that where else apart from gold are people with cash going to put it? Where's it going to go? Properties are very questionable at the moment. There's no interest anywhere to be had, anywhere about the place. So I guess, and there's a lot of liquidity in the market because of what the Reserve Banks are doing. So I'm guessing, and fiscal policy as well, not only monetary policy. I'm guessing that's the reason. They've got to put their money somewhere.
They've got to put their money somewhere, absolutely. And they certainly
they're too scared to go into crypto, Shukri. well, us of us who are 60 plus, anyway.
They certainly have put their money into gold as well. The reason I say that's not so tradable for me is because the trend for me, certainly on this daily time frame, has for now come to an end, because I've got a lower high there. I still just about have a higher low potentially in this low test bar here, just about. Price is looking bearish from here on in, but I don't have any confirmed trend. So for me, I'm just being patient. I'm just sticking out of this. If this is the top of the market and it's going to crash all the way down, back down to, 1,500 or whatever, well, at some point a trend will develop and I will get in and make profit from that. But right now, I'd rather wait for certainty, or more certainty, more convincing direction. So that's why I say gold is not so tradable for me at the moment. I'm sure there are still plenty of people making money from that, but I'm just going to sit out and wait for things to develop a little bit further before I take any further positions there.
Interesting, that bar, which is essentially a doji. It's a very small spinning top that bounced off the monthly pivot. You would have thought that once that started to go again, it may take out the highs. Didn't do that. Back there again.
That's what I was looking for. I think I was talking to Paul last week or a couple of weeks ago, and that's exactly what I was waiting for, Jeff. I was looking at this bounce here, and really I was waiting to see if price could at least push up and challenge these previous highs, but it didn't do that. It's formed a definite lower high. So there are certainly some profit taking going on, and even some sellers coming into the market thinking this is high enough now. Let's take some quick profits to the downside. And
let's see if we can entice some sellers into the market so they can give us a good price to get back in.
Exactly. That's what I would much prefer to wait for. So that's pretty much, Jeff, what I'm going to be looking at for today. It's I'm going to be focusing on those indices if they yield any opportunities on my strategy, and I'll be keeping an eye on Singapore dollar. I'll be keeping an eye on a few other things, but there is nothing setting up right now. I need things to change a little bit before I actually find any setups, and that could happen at any moment.
Yes, we all know that. So I guess your day's pretty well mapped out, and you haven't got a very busy schedule. We haven't got to look at too many at all. It's wait on those that you've mentioned, and if they turn up, happy days. If not, guess what? It's always tomorrow.
Yeah, in terms of trading, it's going to be a pretty relaxed day, I'd say. Yeah.
Yeah, I think pretty much the same for me. I've kind of changed a little bit the way I approach the markets from week to week, and I guess that's happened because I've had to do analysis on Sundays instead of like 5 minutes before a show on Tuesdays, which is what used to be, right? So I was never ready by even Tuesday, London Open, to trade the market, really, in all honesty. And that's one of the reasons I never traded the first candle of London session, apart from the fact that it's unreliable. But that said, these days now I do my analysis on Sundays, ready for the Sunday show, and I tend to now flow that through, and I take that analysis into Monday, and if it hasn't set up, then and shows like this, somebody will say, well, what did Sino say there before? What about Euro Aussie, which I'm not looking at, but then I go to a chart and say, oh, okay, yeah, that's interesting. And then we might get an idea off that. But generally, I'll just stick to, and I know you guys have done it for years, just have a watch list and stick to that watch list. I'm now finding that, like you said before, sometimes you just learn things or they come to you that, okay, that's actually not such a bad idea. Maybe I should do that. And when you do it, I don't know, it just gives you a new lease on life or trading life anyway.
Such a difference, doesn't it? That is, I would say, my number one, or one of my number one tips, one of my top 5 tips for successful trading is get your market analysis done early on. If you can do it on the Sunday, perfect. Because
as I said,
unemotional, the markets are closed, and you can
you got a beer in your hand,
yourself up.
or a wine. It's not
yeah,
too,
exactly.
But yeah, as I said, I used to do it on Tuesday, about half hour before whatever show, and it's been TTR forever, I suppose. Well, not forever, but going back a few years before that, I was also doing a similar thing on a different network, if you like. And lazy me used not do it until, as I said, about half an hour before the show, and you just haven't got time to give the market its due difference at that point in half an hour. And really, I guess that stems from I only ever used to trade one pair, one currency pair, euro US dollar.
That's true. Yeah.
The first 7 years of my trading career was trading one pair. And if you guys can't get your head around that, it actually taught me some very, very important lessons. Number one was that get to know the currency pair that you're trading, or have a strategy that it doesn't matter. In other words, be an expert on a currency pair or an indice or a commodity or whatever the case may be, or be an expert on a strategy. If you can do both, perfect. It really works. But anybody who comes to trading, in my humble opinion, should practice a strategy on a commodity or a currency pair or an indice to get that particular system working properly for you. Then move on and progress. And really, at the end of the day, that's what I've done. I suppose that's why I find it such a good way to do it.
I couldn't agree more, Jeff.
Yeah, get to know both things. Get to know the pair or whatever you're trading and the system at the same time. It makes it far easier. And I think at times, and I know I'll probably get struck down by the boss here by saying this, I think at times we tend to fill people's heads with so much information that it can be confusing. And I think that it's not that we offer that for that reason. What we offer is something that may suit individuals. So a trend trading strategy may suit somebody who just likes to do it that way. An end of day strategy might suit somebody who's got 5 minutes a day to spare. An intraday strategy might suit somebody who's got 2 hours to trade London session or the open of UK session. So, it's horses for courses. And I would really, and again, I'll probably get struck down by lightning here, but I would really encourage people to try everything, definitely, but not at the same time. It's really, really confusing. It can be. And, if I'm saying, case in point, you're trading the Aussie long, I'm trading the Aussie short, we're both making money. But to somebody who hasn't traded before, they'll be going, WTF? How does that work? And I would really encourage people to try everything, most definitely, but do it in batches. Say stick with the income creator for 2 or 3 months, and I know that can be expensive, I suppose, but and then if you've got that down pat, or if you don't like it, or it doesn't suit your lifestyle, or whatever the case may be, move on to the next one until you actually do find something that works. And once you do, you'll then come back to what you've learned in those other strategies anyway down the track, and you'll apply them to whatever suits you in any case. So you haven't lost anything. But I would really, if I was doing it, and I didn't have this luxury, I've got to say, when I started trading, I would definitely not take on everything at the same time, because gee whiz, I don't know how you guys do it if you're doing it, really.
It is a really, really good point that you've made, Jeff. The reason that we teach and talk about so many different types of technical analysis, so many different strategies, is not because we're all experts in all of them. Absolutely not. But it's because we know from experience that different people resonate more or less with different types of strategies, different time frames, different aspects of technical analysis, and out of everything you can then pick and choose the bits that you like. But if you try and apply everything all at once, then it will get very, very, very confusing very quickly.
Messy and expensive too, I would think.
Exactly.
I can see accounts being emptied under those circumstances.
The only time when I was first learning to trade, the only time I started to become consistent was when I focused on one strategy with a very simple set of rules, almost simpler than what I trade now, and one time frame only. Just one time frame, one strategy. And I worked on that until I perfected that. And then I started building in other time frames because that's what suited me. I went from having a full-time job to becoming essentially a full-time trader. So I did have the time to look at other time frames in my trading as well. But that wasn't how it started off. And I definitely wouldn't be successful trading all the time frames now had I not focused in on one to start with and then built my way back up. It's better to start small and grow rather than try and absorb everything all at once, use everything at once, and end up becoming very confused indeed.
Yeah, I refer to it as the tools. You can't have enough tools, but they belong in the shed on a pegboard or in a cupboard or whatever the case may be, and you only use the tool that you need for the particular application. So in other words, you're not going to build a pen holder with a chainsaw, right? You need something a lot smaller than that. So how do we get into psychology, by the way? It always fascinates me, and I love talking about it because to me, it's one of the real things that you need to get your head around. But yeah, it can be boring for those listening, I guess. Mate, thank you so much.
No worries.
If you want to hang around, by all means do so. I'm just about to launch into trade mode as we now have new 30-minute candles, and we will go from there.
Excellent
Look
stuff.
at all this crypto talk going on in the background here. Okay, talk among yourselves. That's all good. I'll answer the questions if they come up. Rightio. So what are we looking at, guys? I've got a watch list. Hang on, I'm in the dark here. I've got to turn the light on. 2 seconds. That'd be me getting up that big noise, right? So let's start with the first question that we got about a currency pair today, and that was from Sino, and he was asking about Euro Aussie. Now, Euro Aussie is very clearly, well, certainly on my chart, very clearly on the 1 hour, and that's the time frame that we're talking about. On the 1 hour chart, we have got the bottom of a range, right? On the daily chart, interestingly enough, we're coming off the top of a range. So that makes it a little bit interesting, but you can see also what's going on within that range. You've got the monthly pivot absolutely caressing price all through last month, well, for the most part of last month, and price refusing to go back below that level at this point in time. That's interesting that we're trapped towards the top of this range and haven't come near the monthly pivot for some time. I expect that's going to change, to be fair, because we keep going bang, 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 bang on the top of the bigger range and haven't yet come back to even look at the monthly pivot since we bounced off it and went into that range, or if you like, resumed that range. So 2 things for me to note. One is, well, there's actually quite a few things to note. Look at these candles. Low test bar on the weekly pivot, high test bar on the weekly pivot, low test bar on the weekly pivot, high test bar off the weekly pivot, high test bar underneath the weekly pivot again. And that probably signifies to me that there's a strong chance we're going to test the monthly pivot. If I'm looking, however, to trade the range, what am I looking for? I'm looking for a higher low in here to trade it to the top. So it's very confusing in terms of the structure of the market. It could easily go either way, in my humble opinion. But then when I look at from a tradability point of view, I've got to look at 2 things. One, where do I think the direction intraday is going to be for today or for this session? Well, to me, it's always the same. I'll trade the highest probable direction that I can find on the chart. And the highest probable direction I can find on the chart, I'm sure the people who trade Slingshot won't be surprised to know, is long. And there's a very good reason for that. Because we have an untested daily pivot above us. Now, what that doesn't mean is let's go long. What it does mean is if we get the opportunity from a, well, whatever your system is of getting into the market, then that direction that we will trade will need to be towards the daily pivot until such times as that tested. It may not be tested, right? But the probability is that it will sometime today be tested. So it's not a matter of do, it's a matter of don't. And the don't is don't trade away from that area at this point in time. So yes, the bias is most definitely long intraday only, because I've given you 100 different reasons why it can go either way. But for this particular circumstance, then we need to trade towards here if we find a trade at all. If there's no trade, obviously we don't trade, but you're looking for setup and there is no setup here at the moment. We're guessing that will go here, but we've got no idea when. So the answer to the question is, do I see a long on the Euro Aussie on H1 right now? Answer is no, I don't. But is that my bias? Yes, it is. And we keep rejecting the level here, right? So we can break here, go to monthly pivot, wouldn't surprise me in the least. Or we can go up here, put in a higher low, and it's at that point I start to get interested, because that then becomes Shukri what? What does it become? Becomes the big C. And Shukri will put that word in there in a minute, I'm sure, for everyone to see. It's the big C that we need, always the big C, that word. So, well, sorry, I keep saying we, it's I need. You can do whatever you like, but if I'm advising somebody, I'm saying don't go short here, but I'm also saying wait for confirmation that we can go long. And the confirmation isn't there right now. We need to see that higher low. Right, that was a long way around it, wasn't it? But sometimes I just need to dig deep and give you a damn good reason as to why I think what I think. And that's why I think what I think. Righto, so back to what I'm looking at this week. And I had 1, 2, 3, 4, 5, well, four and a half on my watch list on Sunday. Confirmation plus confidence, you got it, Shukri. That's the one we're looking for. Pound CAD was one, and I was looking to trade that short. Now let's take a look at that and see if there's something there that we can grab onto. And the answer is no. If we follow, and we just saw on Euro Aussie how much it was enamored with the monthly pivot, this is also exactly the same. Rather than setting up short, and of course we're now into Thursday, and it did go short from when I was talking about it, but not too far. So really, the trade that I was waiting on still hasn't turned up. And I don't see that anytime soon. But if you know how I trade, you know I'll be looking for a break of resistance to trade short. And I know that sounds weird, but that's exactly what I'll be looking for. So if price gets back up to here, and you can see the range that we're in now, right? Let me, oops, that's not what I wanted. Let me put that in for you. Perfect, it is not, but it is definitely there. So as always, I'm looking for bottom to top, top to bottom, bottom to top, top to bottom. So very, very difficult for me to trade this short at the moment with my bias. Now it's a little bit too late. But if we got up to here and did something like this, if I can find my pen, there it is. So if we shot up to here, which is tantamount to what we're looking for as range traders, right? Bottom to top, top to bottom, bottom to top. Then we're looking for a higher low here, which we may have just printed. And then a rally to the top. Is this tradable for me? No, because I'll be trading straight into the monthly pivot again. Not that that's the scariest of things at the moment, because it's been broken, retested, etc., etc. So it's not, that's not the real issue. The real issue is that I don't have a setup. Like I said before, that's the 4-hour candle. Maybe I do have on a smaller time frame, but to me, it's all about the confluence, the confirmation. I'll get that out in a minute. And of course, then you need a setup. That takes away a whole lot of ghosts and a whole lot of issues that that can get you in the poorhouse very, very quickly. So for now, yes, I see that this is a potential higher low, but I haven't got a setup. Maybe I get one. If this candle would have closed here, for instance, then I got a decisive bearish bar that came back the other way. Then I've got an entry. Why? Because I've got an insurance candle. And that insurance candle stops me from going broke very often. And what it means is, if that candle is bearish and decisive, and these dudes are carrying on with the job, then the price will go to here. But if these guys here are truly in control, as we expect they would be, because we're range trading, right? We want to go to here. Then as soon as they get beyond that bar that they stopped on, if you like, or that they stopped, or the hour closed on, and then the sellers came back in, as soon as they get to there, they should accelerate and go to that level with a little bit of a pause here, which is where what? We take TP1. How do we read the insurance candle? Okay, that's a good question. What is the insurance candle is probably the better of the ways to describe it. And again, what it really says to me is, if, and you've got to understand that I work on cause and effect. And what do I mean by that? The cause of the cause is going this way. So we're expecting it to go this way, right? We've got a little double bottom. We're coming off the bottom of the range and we're expecting to go to the top. So the cause is all about there, going that way. The effect comes when the sellers are wrong. Well, that's not right. Hang on, let me get rid of that. When the sellers come in and drive the price back to here, and it can go here, it doesn't matter where it goes. The insurance bar is that bar because we want to go long, right? But if we go long here, above that candle, above the bullish bar that's just about to close, right? Well, sorry, this is a 4-hour chart. But if we go long there, we've got one shot at this, and one shot only. And if we get it wrong, we're gone. But if we take a little bit of insurance on this by allowing a candle to come back, then we've got really two chances at this, which means we've got insurance. And the two chances are, as I described before, if the sellers have regained control from the buyers, we're not in the trade. But if they regain control after this candle closes and they've just snuck above it, and then they've gone bang, or even more often, as they do, they let it go through a previous resistance level and then go bang. And understanding that process is very, very important when you're intraday trading, or any sort of trading, to be fair, because there are orders here. There are stop losses and there are buy orders. Now, stop losses, if you're going short, is a buy order, right? And if you're going long,
it's also a buy order. So there's a ton of liquidity sitting here. This is a liquid level. And if we don't go through it on the first occasion, then all of that liquidity, all buy orders, every single one of them is a buy order here. Because if it's a stop for the short, it's a buy order, right? Or if it's an entry for the long, it's a buy order. So there's massive buying liquidity here. And this is part of the strategy that I use as well. And understanding that is super important if you're trading intraday. Super important. And again, the insurance comes with this next bar, not the bar that we're trading, but the next bar. Oh, sorry, not the bar that's current, but the next bar. So instead of going long above that bar there, then we want to wait until it's, in my mind, proven that these guys are in control, because they're going to wipe out this selling bar, right? They're going to wipe it out. And if they do, they're going to come back here and they're going to pick up all of this liquidity above here and drive this through to that level, at least that level. So we always want, as a slingshot trader, a selling bar if we're going long, or a buying bar if we're going short. And here's the case in point. Right, how many people are buying here? This is exactly what I just spoke about, right? Everyone's buying here because we just went through the monthly pivot. We've just come off a double bottom. So everyone buys. Whoops, hang on a minute. Bang, out, gone. But what happens next? They come back in. After all of these dudes have been, all these dudes who went long have been taken out, they then come back and go in the same direction. And if you study the charts, you'll find that that happens so often, it is simply not funny. And I think somebody wrote something really good on this, and I'll bring it to you one day. It's look up bull traps and bear traps. Google bull traps and bear traps and study that. It'll give you a very, very good understanding of what I've just been talking about. It's where the big dudes are waiting for us, right? And they lead us to that point. And it's a well-timed and well-proven strategy. And at the moment, I see lots of it going on. And it's not unfair play. It's not the brokers taking your stops. It's not the brokers saying to you, bad luck, dude, I'm going to take your money. It's not the brokers at all. It's the big dudes, because they're chasing liquidity all the time. That's what they need. Because if they look, if they want to enter the market here, right, or here, it's too late, because there's only sellers going here now. So they can't enter the market here with a $10 trillion, sorry, that was a bit big. Let's say $10 million order, because they're not going to get entered there. They're going to get entered down here because there's no buyers here. They're all sellers. So what they can do, hang on 2 secs. Looks like we're going long. We should be taking profit, not yet, on pound in 1 pip's time. Okay. What they can do is drive the market back to this level. That bar there would be a perfect example. And then as soon as all these stops are taken out, stops are above here if everyone's going short, then bang. Then they take their profit and say, thank you very much. That's a really, really cool lesson to learn. If you're trading intraday, that happens time and time and time again. And you have a look at the charts. You will see that happen so much. It's not funny. Market makers, yeah. Big dudes. Anybody who's got a big fund, all the institutional traders. That's what they're looking for. They're looking for your liquidity. And we poor little suckers, we feed them like no tomorrow. Whales in crypto, Shukri. Look, they're just traders, man. They've got a big account. and they're trading against people such as us, retail traders, who really, what we need to do is learn or get to learn how they trade, how they think. And once we get there, gee whiz, you'll stop losing money. I can tell you that. You really can. And look, it's not easy to do, because you see a setup that's so good and it's been so reliable over a long period of time. And you go, oh, yeah, I've got to trade that. But next time you do, just have a look around you and see if there's a level like that that's obvious, or a level like this that's obvious. How many times have you seen price go to here? Oh, yeah, breakout, awesome, let's jump in. Incorrect. You've got to wait for that retest. And what do we call that bar, guys? The insurance bar. That's why I talk about it. That's the insurance that you've got. Because if these dudes are hanging around, these liquidity seekers, right? If they are hanging around here, they're not going long. They're going short. And they're just going to gobble you up real quick. So that's why I like to see the break and retest. And every single trader that trades that way will tell you exactly the same thing. That's why we look for that insurance policy. And that's how it works. And that's why now I would never go long here above that bar. This should explain to you guys a lot as to what I do and why I do it. I only want to trade long after a selling bar. I never want to trade long after a buying bar. Break and retest, absolutely. To me, do I miss trades? Shit, yes. Because of that very thing, because it's not always the case. They're not always here lurking around, because they don't always have an opinion that this market's going short. And therefore, the retail side of things, or simply momentum of traders, will pick that up and run with it. So I'm not always right, that's for sure. But knowing these levels are very, very important things. And that's why you'll always see me looking for this type of thing as well. Because guess what? Most breakouts are not breakouts, as we know, or we should know. If we don't know, we need to learn that, because it's very, 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 very important. Okay, we've spoken philosophy, we've spoken liquidity gathering, otherwise known as stop hunts, right? It's exactly the same thing, but it's not your broker that's after you. It's the big boys. They're after you, and they get you, and they don't apologize for it. But knowing and having that knowledge, and study it, really study it. It's worth studying. And you know, it's available out there. Just Google it. You'll get some answers. Okay, do I want to trade today? The question, Euro Kiwi. What? Now, Euro Kiwi, I got rolled on Euro Kiwi, and I shouldn't have. I meant to talk to the broker about that today, actually. Now, I traded this short yesterday, right? And the question is why? Is that right? What is the reason? Okay, let me go back there. What is the reason for yesterday's Euro Kiwi 1 hour trade? Right, okay, let me tell you. And how much would you like to bet that I wasn't trading a bull bar long or a bear bar short? Righto, here's what I was doing. We had, and I'm bearish Euro Kiwi, right? And have been since Sunday when I did my analysis. Or was it even the week before? No, it was only Sunday. So what we had was, actually I better not use that one, I'll use that one. We had a trade line coming through here, and we were looking to trade, I think it was on the 30-minute chart, wasn't it? Yes, it was on the 30-minute chart, and it didn't set up properly on a 1 hour chart because I was looking for both, right? If you'll recall, I was looking for both. Now, what should have happened here, my God, I've got messages coming in left, right, and center. we've got a break to the high side. And funny thing that I was just talking about this, wasn't I? Somebody got some liquidity here and drove the market down, and then picked up some here and drove the market up. What a terrible chart, really. And trading 30-minute charts in this environment is really, really tough. But here's the candle that we traded, right? This one. So I traded on the 30-minute chart, got in, and price went straight against me, but it didn't take me out. But somehow I did get taken out of that trade before TP1, which was here. And that shouldn't have happened. I've got to take it up with the broker. So I should have had a break-even trade and I had a loser. But what I did say at the time was it should set up on an hourly chart exactly the same. And if you know how the false break trade that I use works, it's break, consolidate, not so many candles are needed, only a couple is okay, then come back below the trade line, right, this one, and then retest it. So going back to what I just said, I trade a bull bar short entry here, terrible place to enter, and I said that at the time, extremely high risk trade, but there was enough room to take profit here. Take 50% off, move your stop loss, whatever it was, I think that was 8 pips or something like that. So move your stop loss to there. Once you get taken in, once you hit TP1, you move your stop to here, and you would have been taken out on that bar there. And that's exactly how that should have worked. For some reason, my stop loss was here, and I got taken out before the order closed or something. I wasn't looking at the chart at the time, but when I did come back and look at it, I wasn't in the trade. So I don't know exactly what happened. Shouldn't have been stopped out, but that's exactly what happened. So with the hourly chart, that should have set up exactly the same. So break back below, then retest or come back above with a decisive bullish bar. That's the key. And what happened on the hourly chart was this. We came below all right, but we then got a doji with the exact candle that I traded on the 30-minute chart, right, which turned into an hourly chart. And if I didn't say at the time, and I should have and probably did say at the time, if this is a decisive bar and closes on or above the trade line, then you can trade it short and take TP1 here. As it turns out, this turned out to be the bullish decisive bar. And if you traded that, well, you're very, very keen if you traded that, because 73 pips on a 30-minute chart doesn't work. And the reason it doesn't work on a 30-minute chart, DR1 and DR2, or sorry, DS1, are the parameters around which you need to be working on a 30-minute chart. So if there was, which is the daily range of yesterday, right? DR1 and DS1 is 128 pips. If you're trading a candle that is 70 odd pips in size, 73 pips, you've got what, 20 pips before the DR1, and you've got 30 pips before DS1. Doesn't make sense, because you don't want to be trading outside of those areas, right, when you're trading 30-minute charts. So that's why we don't trade candles that are 73 pips on a 30-minute chart. It may work, but the reward to risk and the probability of you making money is extremely poor, certainly in that session, certainly in that day. That's for sure. Wow. More lessons than trading here going on, but that's okay. Sino, is that why where price of a pair moves? It moves very fast. Prop traders hunting stop losses. Potentially not the only reason, Sino, but yes, when you see something like when you see something, well, that's a gap, doesn't really count. But yes, when you see a big bar that moves generally in the opposite direction of momentum, then you'll see that somebody has just jumped on you. That's probably a case in point there. That may have been a news candle also, I don't know, but yeah, that sort of thing. That one there, that's taken everything that's going that way. They're generally more obvious than that. They generally happen after a move off the top, such as here. Bang, look at that drive. That's serious money gone in there, right? That's really serious money gone in there. So that sort of thing, yes, happens when you're finding that the stops have been hunted. I don't know that that was the case here, and it's not the case all the time. So don't get paranoid about it, but be aware that it can happen. That's all. What a terrible person to make the trade go the other way to my trade. Yes, they seem to be terrible people, but that's the game we're playing, Helen. You know, we've got to be aware of what they're capable of doing. It was a buy on 1 hour, I thought you said, and the time was a green candle, which Rapido read, Helen. On Euro Kiwi yesterday? No, I wouldn't have traded long Euro Kiwi yesterday. Definitely short. Because I traded it. I traded it on 30-minute chart, as I said. It's not funny. No, it's not. And that's why you need to educate yourself on that. Euro yen exceeded DR3. A lot of stop loss hunting going on. I can feel it while it stops to see where you are, and then I move it. Yeah, it's not like they're looking over your shoulder, Helen. They're actually looking before you make your move. They've got a plan well ahead of what you're doing, I can assure you. It's not a case of they're looking over your shoulder. No. Definitely not a buy. No. That was last night on Chloe's show. Oh, what was the pair, Helen? I think I was talking about Euro Kiwi again, and there's no way I would have been trading long. No way. Because my bias is short and I've got a short setup. And as I said at the time, you could trade it on the 1 hour chart. If it did what it didn't do, we needed to have a bullish decisive bar here. But happy to enter into conversation with you tomorrow, maybe. When we've got more time, because we're kind of running out of it now. Okay. I'll watch the replay. I'll watch the replay of that if I can. Don't see any good. Look, I don't see any at the moment either, Sino, and that's why I'm more than happy to talk about strategy and psychology and all the rest of it, because I don't think there's anything about at the moment. I think we're. Oh my goodness, Euro pound's going down again. Thank goodness for that. How many times has it happened? I've put in a new TP2 round about here as well, just at DS2 on Euro pound. I want to see how the others are going as well. Dollar Swissy shouldn't have been entered yet, but that trade that I had yesterday on Dollar Swissy, or order that I had yesterday on Dollar Swissy, I have replaced the order. So if you want to follow that one, the entry is still at 0.9165 if it wasn't. Aussie Yen H4, I'll have a look. Stop loss is 105 pips. TP1's 50, and I'm going to close a third at that point. Now, why? This is really early, guys. This is trading a candle pattern that I like to trade in a position I like to trade it, but it is very, very early. And if you're talking about liquidity grabs, then here's a perfect example of what this could have been. You've got a double bottom sitting here, right? And that double bottom is also at a very, 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 and I think I said a few more verys yesterday, strong level. But this level has not had a close below it since January 1st, 2015, when the euro and the Swissy got decoupled, right? So why now? Why is this going to happen now? The dollar is weak. We know that, absolutely. And maybe this is the time that it just continues to crash. I haven't got a crystal ball, but what I do have is that double bottom that I saw, and look what happened. How many buy orders are sitting there? How many stop losses are sitting there? Got driven down, and there's one of your big bars, right? Bang. These guys are in trouble. So that's the interesting point about that. Then we came back and double crossed the weekly pivot, and that's why I start to get interested there. And we've got an approach and a pullback from a resistance trade line. The level's not great, and I'd most definitely prefer to see the trend line or trade line break as well and be retested, just like the weekly pivot has been broken and retested. What's that called, guys? What's that bar called? Before I go and have a look at Aussie yen. That bar there. If I'm trading long, what's that bar called? Aussie yen. Let me take a look at that. Yes, it's the insurance bar. Absolutely. And it is indeed the double cross. That's absolutely true as well. Sweet. But it's the insurance bar. It's giving us a second chance at life or profitability. Let's put it that way. Righto, 4-hour chart for Aussie yen. Now, I know that there are a lot of bulls about on Aussie yen. I'm not one, at least not yet. And we've been looking at this massive ascending triangle for the longest time, right? Now, what's happening here is we're coming back and having another look at that level. We haven't quite reached, let me go back to the monthly chart and give you the market structure, or the market structure that I believe is the most dominant on the chart in this particular area. And that is the descending channel, right? And it goes a long way, then comes back, goes a long way, then comes back. And the horizontal level that this coincides with, the top of that ascending triangle, which common theory would have you thinking it's going to break to the high side, and it can well do. There's no question about that. And there'll be people who quote figures at you saying that happens 70% of the time. I'm not sure where they're getting that from, but if they've tested it, then I'm happy to go with it. I think it's a range, frankly, and I don't know which way it's due to break. But what tells me that the probability is that it's going to break to the low side is this range. So every time we come to the extreme of this range, we come back off it. I don't see why that will change anytime soon. So for that reason, I'm still bearish Aussie yen until it breaks and retests something, either the top of the range, which is the triangle, or indeed this descending channel, and then I'll look for a trade. In the meantime, on the smaller time frames, there's a range formed, right, which is what I've got this rectangle on. So, and I said this morning to the guys in my strategy, the thing that we must recognize right now is that, and we spoke to Chloe about this earlier, right, a lot of the currency pairs have gone into range. And that's where we, as intraday slingshot traders, need to pay attention, because we can take advantage of bounce off the bottom, higher low, trade to the top, bounce off the top, lower high, trade to the bottom, bounce off the bottom, higher low, trade to the top, bounce off the top, question mark. What do you want to do next? Don't you want to trade exactly the same that's happened in the last 3 or 4 occasions? You're looking for a lower high here to trade to the bottom. Doesn't mean it's going to happen, but if it does, you're in a pretty good spot to take advantage of it. So that's what I'll be looking for on Aussie yen at the moment. And the question was the 4-hour chart. Yep. This is the 4-hour chart. So that's exactly what I'm looking for. Now, if this breaks and goes, let's say, I can't get it. I'll have to go to the daily chart. if this breaks, there's not a lot to stop it here on the daily chart until we got to here. So I can absolutely see that's entirely possible. But until we break out of this range, shouldn't we take advantage of it and just trade it? So that's precisely what I'm looking to do. If it breaks, then it goes. Who cares? Doesn't matter, because we've got what? We've got an insurance bar that gives us the advantage of, if our directional bias is not right, then it doesn't matter. Okay, there'll be times where price does come back and take us in on a bad trade. There's no question. That happens to everybody every second day of the week. But that insurance bar gives us the confirmation that we need to have, or that I need to have. As I said, you can do what you like, but for me, it's all about that. And that's how I stay liquid that's how I stay profitable in the market. Otherwise, I don't know what I'd be doing. I'd be doing something else, I suppose, losing money. That's kept me safe for many, many moons. And I hope it helped you guys. Insurance bar valid on M30 or on any single time frame. The insurance bar is the insurance bar. Now, don't let me stop you trading with any other strategy, guys. That's not what this is about. This is the way I trade. And it's very, very useful in range trading. It's very inapplicable. Well, I won't say it's inapplicable, but I wouldn't be trying to adapt it to trend trading. It's not what it's designed to do. Righto. So I don't have any trades up my sleeve at the moment. Chloe, you're still there.
I am indeed, Jeff.
Any updates before we go?
I don't believe so. Let me just have a look at...
This was supposed to be a trading show, and I haven't even looked at the trading chart. It happens that way sometimes.
I mean, I'm looking at Singapore dollar, but I don't have a setup at the moment. So I am still going to be keeping an eye on it and have been doing so, but no setup as things stand right now.
Okay, I'm very, very quickly going to buzz through these 30-minute charts, because that's what I really am here to do. So with Aussie yen, it's on my watch list, right? And you now know why. It's on my watch list to trade it short into or down towards the bottom of the range, but there's no setup. Until I get a setup, there's no trade. So I'm not just guessing that this is going and I get it right, happy days, but I can't guess. I've still got to have a slingshot setup that suits me, or maybe even somebody else's strategy setup that suits me, but I've got to have confirmation, must have that. So I can't do anything until that's the case. Aussie Kiwi, I'm also looking to trade the range on, and this is going to be exactly the theme that I'm going to give you, because as we said with Chloe early, there's a setup already. If this candle in 47 minutes closes as is, then I will look to trade that to here, about that level there for TP1, and close everything as you get near the top of the range. So I'll give you those parameters now. Won't be placing the order until this candle closes. And if it is, what sort of bar, guys? If it is that sort of bar, then I will trade it long. I'll put my stops underneath the weekly pivot, right? Because that just makes sense. But this to me looks very, very promising as a false break of that trade line, and a little bounce off the weekly pivot to boot. And if we get that bar there, which will be a question mark bar, what sort of bar, then we've got a trade on our hands. So we'd take TP1 here and we'd get it out of the trade there. Why are we looking for a long? Big double bottom off the bottom. We've got a mess, but we've got a higher low there, and we've potentially got another higher low here, and we're looking to trade long. Seller bar, yeah, it's a seller bar. It needs to be a seller bar, has to be a seller bar to be our insurance bar. So that's Aussie Kiwi, and I am happy to trade the range to the top, and then I'll be probably looking for a trade to the bottom. CAD Swissy, we're already in this, aren't we? CAD Swissy. Where's that? Okay, CAD Swissy, we've taken 1 TP here or 2, I can't remember. Only 1. Okay, so we've still got a little bit of risk on the table. Gee, we're way down here. I could tighten that up, certainly do that tomorrow. But again, back in the range, and we've got a low. We've got a potential higher low off the weekly pivot. That's nearly that bar. It's a bit risky, but it's nearly that bar. So a few issues with this one, right? One, has the daily pivot been tested is the question. And I'd love to hear some answers on this, but I haven't got time to wait for them. I'm going to give you the answer. In my mind, the daily pivot has not been tested today. Yes, it's got price on it, but hasn't the daily pivot come to price rather than price come to the daily pivot? I'll leave that question with you. So for that reason, I'm thinking that is still the probable outcome at some stage today. The other issue I have is we're between DR1 and DR2. Now, that's okay. I can deal with that. But if we take a risk of, and you've got to get your stops probably down there, 16, 17 pips, trading into DR2 with 4, maybe 5 pips of take profit, do we really think we're going beyond DR2 to DR3 without a daily pivot test? I'll leave that one with you as well. The answer for me is no. Are we going there today? Probably not, because of that reason. So if we're not going there today on a probability factor, then I don't really want to know about that. Now, tomorrow, it could go to DR67. It could go to DR67 today, but the probability of that happening is very, very low. So for that reason, I won't be taking the trade. I hope it does go to DR67 because we make more money. Euro Aussie, we've spoken about Euro Aussie, so I don't need to go there. Euro Swissy and Pound Yen are my other two. Euro Swissy. There. Same thing. And this is even better, really. And the reason it's even better is because of the monthly pivot. It's like a wicket keeper. It's really keeping everything in check here. And not one thing has even threatened to close below the monthly pivot the entire month. And we're at day 26. So pretty obvious to me, untested weekly pivot. Gee, I think a smaller time frame, maybe even. A retest of the daily pivot here would have to get it, and it's probably already happened. We got a double cross to the daily pivot earlier in the day. So we're probably too late on this. What would get me into it? But you can see that's exactly what I'm talking about, right? Didn't give us the higher low until there, but it did. And if we get another one and it's tradable from a setup point of view, then why not? This is pretty close. It's almost tradable there. Let me have a look. If you got your stops below the daily pivot, not that it's a real threat now because it's been broken, retested and rebroken. 11 into 3, it's a bit tough because you're trading straight into DR1. I think you've got to let that break and come back, then look to trade it long to weekly pivot. It's tough trading into a resistance level, so I won't be doing that. But keep your eye on it, break and retest. Insurance bar could be the go. And finally, Pound Yen. I think I'm counter everyone else on this one as well. I think everyone's bullish Pound Yen at the moment. That's not me for obvious reasons, because we are at the top of a range. We are looking for a daily pivot test. 2 ways to look at this. One is we get the lower high and then we trade it to the daily pivot test, taking profit and getting out probably at the weekly pivot, or get the daily pivot test, then put in the lower high, then look to trade it short. Either way, I'd be happy. But that's where I'm at, guys. It's range trading day. We're in the zone now. So we've got to look at these things. If you find rectangles, if you find channels, if you find anything that's giving you a consistent off the high to the low, off the low to the high, off the high to the low, etc., etc. If you find that in any way, shape, or form, at the moment, I think it's very, very wise to be looking at them, because I think that's where we're at. We're in range territory. Maybe that changes tomorrow. Everyone's got their eyes on Jackson Hole. Yeah, Jackson Hole's been a little bit of a fizzer in the past for me, so I don't know. It could do lots of things. Lots of small rectangles. There are lots of rectangles on the chart at the moment. You're absolutely right. We need to take advantage of them. Doesn't matter what time frame, just take advantage of them. But look for the bounce and the lower high if you're going short. Look for the bounce and the higher low if you're going long. And the best ones are when you're broken out of the bottom, then come back inside and then look like it did here, right? Then look for the higher low. And let's see if we found one on the smaller time frame. Once we came back inside, there it is. Bad candle, but it might have looked okay on a 30-minute chart. "30-minute chart, it's just black. Probably have to make a big call on that one, but it is black. Not much insurance there, I can tell you. But look what happened. Bang. So there you go, guys. There's a little piece of what I'm looking for the rest of the day and potentially the rest of the week. We shall see. They're my pairs. Why? Because they've got very, very obvious rectangles on them. There's another one in there, right? So there we go. Guys, thank you for your company. Thank you for all the questions. And Chloe, thank you so much for being here. I will check in with you just before you close your show, which comes up when? Chloe may have left. Chloe has left. Okay, no drama. That's why I didn't get an answer. Okay, so Chloe's show starts at Welcome LT at hang on a minute, 7:45. Yep. Chloe and Orlando will be along at 7:45. Ash and I will be in at 8:30, and we'll go right through till about 10 o'clock, but only in Facebook and YouTube until 9 o'clock, where we go into our subscription show. Hope you had a bit of fun, guys, and hopefully learn a little bit about how I approach the market, and then we'll see if it produces anything. Right, guys, have a great one. It's hump day. Hope you get over it well. See you later. Bye-bye for now.